A lot of companies recently have either cut, suspended, or completely stopped their dividend payout as a result of the pandemic. If a company raises dividend in an environment where we are dealing with a lot of unknowns, you should pay attention. Hey guys, welcome to Think Finance. My name is Raj, and on this channel I talk about personal finance, investment ideas, money management tips, and all things finance. If you're new to the channel, consider subscribing. In this video, I'll discuss the power of dividend, why companies pay dividend, and talk about some companies that recently raised dividends when others are cutting or suspending. If you follow this channel, you know I have a major fetish for dividends. Indeed, 50% of my portfolio is invested in dividend growth stocks. Companies pay part of their earnings in the form of dividend to investors. These are typically matured companies that don't need to reinvest as much back in their business to innovate and grow. They end up rewarding investors in the form of dividends. Investors see dividend as a sign of strong and consistent performance, growth in future earnings, and stellar management execution. Of course, investors also love steady dividend income, and it makes the stock more attractive. So why is dividend so important to investors? At the end of the day, a typical yield is 1 to 3%. There are a number of reasons to be excited about dividends. Here is why I get excited. Dividend reinvestment, which can help generate wealth in the long run. Let's take an example. If you invested $10,000 in SPY at the beginning of 2000 and reinvested dividends, your money grew to almost $30,000 today with $5,000 in dividend. Now imagine if you made additional contribution of $500 for last 20 years. With the power of compounding, your money can literally explode. While it may sound boring, consistently investing in high quality dividend paying companies can make you wealthy in the long run. So while a lot of companies out there are reducing dividends, there are a few that actually raise dividends. Why is this important? Well, raising dividend during a recession is an impressive way to show confidence in long-term earning. It is the ultimate vote of confidence. Let me caveat by saying that there are a number of other criteria you would consider when it comes to investing in a company, but that's a separate video. Point being, yield is not everything. From a dividend perspective, I typically look at dividend history, dividend growth rate, and stock appreciation. Let's look at some of the companies that raised dividend in April, and if you're not investing in these should be on your watch list. First on the list is IBM. They recently hiked their dividend by 1 cent. May not sound like a big deal, but this blue chip company has raised dividend for 25 straight years and have consistently paid dividend for 100 plus years. Yield is at impressive 5.3%. However, in the recent years, stock has gone nowhere. Reasons to invest: relatively cheap stock compared to peers with a PE of 12 and their investment in Red Hat. At some point, this will pay off. Next on the list is RTX, or Raytheon Technology Corp. This is a product of recent merger between United Technologies and Raytheon Company. Post-merger yield is at 3.3%. Typically, this would be an awesome defensive play when dealing with a recession. However, their business relies heavily on the aviation industry, which is in a mess for now. Now let's talk about the Southern Company, ticker symbol SO. They raised their dividend by 8 cents, and it marks 19th straight year of consecutive dividend hike. The yield stands at 4.6%. Reasons to invest: this is a gas and electric utilities play, a decent option when dealing with a recession. Costco is next on the list with ticker COST. The board approved a quarterly increase in dividend by 5 cents. Yield is approximately 1%. Reasons to invest: steady performer, stellar management execution, and a long history of dividend payout. Something to note, this stock has thrived in pandemic-driven economy and is no longer cheap. It is trading at a premium compared to peers. Let's talk about the healthcare giant Johnson & Johnson with ticker symbol J&J. The company recently raised its dividend by 6.3%. The yield sits at 2.7%. This will be year number 58 of increasing annual dividend for Johnson & Johnson. While most companies have struggled during the pandemic, J&J stock has been on a tear. Of course, it is also considered a defensive play, but J&J is also a lead player in developing COVID-19 vaccine. Something to note, the stock is sitting close to its 52-week high, and some might argue the PE is stretched compared to peers. Toilet papers, toothpaste, and diapers is doing wonders for Procter Gamble. Ticker symbol PG. The company raised its cash payout by 6%, marking 64th straight year that P&G has increased dividend. At current stock price, yield is at 2.7%. Another stock that has thrived in the crisis and is considered a solid defensive play. Despite global supply chain issues, they have found ways to deliver essential products to consumer. Final one on the list is Apple, ticker symbol AAPL. This company raised quarterly dividend to 82 cents, a 6.5% increase. This came along with $50 billion increase to share repurchase program. Yield is sitting at 1%. This is a perfect dividend growth stock. Reasons to buy? Of course, their dominance in hardware led by iPhone, investment in newer businesses taking off, including wearables and services. And finally, Apple is a cash-rich company with a strong balance sheet and growth potential. Of course, there are other companies that have recently raised dividend, but these are the ones I believe are worth your attention. Full disclosure, I'm invested in Costco, Johnson & Johnson, Procter Gamble, and Apple, 4 of the 7 companies on this list. Okay, that's all I have, guys. Let me know if you're invested in any of these, or if I missed a company that should be on this list. Thanks for watching, and if this was helpful, hit that like button, and if money gets you going, consider subscribing. Stay safe, and until next time, peace.